We've been struggling to get the sound up on this software for some reason. There was some technical issues going on with the webinar and with the software, so I couldn't really figure out what was the problem. But now we have resolved that. So before we begin anything further, it is important for me to start with the disclaimer and risk warning. So anything which we'll be discussing in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors who will be in much better position to help you and guide you with respect to all of that. So let's begin, guys, and then let's see what exactly is on our agenda and then what to do. But before we do that, it is important that we go through the contact details for you guys and then mention what we are currently giving you guys on a daily basis, because a lot of you guys have mentioned that you guys have a bad habit, or you've been trading over to 1 year and then you still need a support. And it is really good that you need a support, because this is a learning curve. This is a world which is never ever going to end, and then you will continue to learn every single day. And then that is what is the most exciting thing when it comes to financial markets, because no day is similar to the previous day. Every day there is something new, and that is what you trade on that particular day. And then that's why I got involved into this market, because I couldn't do the normal 9 to one of those boring jobs where you just keep doing the same thing every single day over and over. But with respect to markets, everything changes so quickly every single day, and then that is where the bonus is, right? So in relation to our contact details, they are right in front of you. Please contact us on Twitter. The handle is AvaTrade, and we are fairly active. We are fairly tweeting on that, and my personal handle is there in front of you as well, Naeem Aslam23. For our YouTube video, you can find us under the YouTube channel, which says AvaTrade. Now, folks, on a daily basis, as always, it is important for you guys to understand that we are producing enormous amount of content. So I put one daily article which covers the full length of the fundamentals for that particular day. I cover what is about to happen, what factors are important for those particular day or days, and then what can really move the market and how much the move has been in the previous days, and then what to make out of that particular move, and how to really understand and digest the actual facts and filtering out the noises, because that is the most important thing. Because right now we are trading in a market which is full with noise, and it is all about paying attention to fundamentals, and it is all about paying attention to technicals. This is why we are producing enormous amount of research on a daily basis on AvaTrade's website. So you can go onto that, and then I'll show you in a bit both the YouTube channel and of course the AvaTrade site as well. So when you go over there on a daily basis, what you will see 3 videos done by myself. Firstly, it is going to be your daily fundamental video. The daily fundamental video is going to cover, as I said, everything, all the major factors. And the second video, which we have started, is which we are doing, is your technical analysis video. The technical analysis video really talks about the major derivatives which are important for that particular day. Like for instance, today euro is quite important, and again oil is very, very important. And you can always see that yes, indices are very important, and we will look into all of that in a bit. But I think these 2 are the most important videos that you got to see, learn, and then you got to watch them in order to learn various different factors from these particular videos. And in addition to this, I also have one extra video on a daily basis, which really looks at the coronavirus and its influence on the financial markets. So we will look at how the coronavirus space is really evolving, because right now there is nothing more important than the health crisis, which is the coronavirus crisis. And I'm sure all of you guys have seen the market moves that we've experienced during the month of March. and then how market has reacted to that. So so this is why it is important that we form our own opinion about how the health crisis is evolving. Has it improved, or is it becoming more worse? So in that coronavirus video, we really talk everything in detail about those elements. So let me go and then show you guys those particular channels. So all what you gotta do, I'm gonna start from scratch for you guys to show you. So for those of you who don't know anything, or who are just a little bit too like for them it is just fairly new. So all what you gotta do, go to AvaTrade, so go to YouTube and then type AvaTrade. There we go, and then we should come up right there for you guys. There you go. 3.5k subscribers there, and then the videos are here. So these are the daily analysis videos. As I said, they encompass the bigger issues, they encompass way more, a lot of variety of stuff in there. So that is why it is quite important for you guys to understand that. Then coronavirus daily update, as I said, this is more about what is there for you to understand about coronavirus and how it is influencing the market, and of course the technical analysis videos there from there as well. As for Twitter, let me pull the Twitter account quickly. So here is the profile. As you can see, it is fairly very active. We tweet throughout the day. So it is important for you guys to keep an eye on them and to learn, basically, to learn what the market information is there. And then this is the handle for AvaTrade. You can see that we are verified by Twitter as well. So you can see all the important informations coming up from here as well. So that goes everything with respect to your social media and how to contact us and what to do with it. Now let's begin with the agenda. But so far so good. You guys can hear me. You guys can understand what I am saying. So please say yes or no. Okay. All great. Perfect. All right. So folks, if you guys do have any questions, feel free to ask them at the same time. I will try to go through as many of them as we can as we go along. But as always, if you have any questions, please follow up with your own managers, your account managers, and we'll be very happy to come back to you as well. Or more importantly, go to AvaTrade. Let me just once again show you that. The website where we already put our all of the research, so for you guys to understand how to find that research as well. So again, go to avatrade.com, and once we go to the avatrade.com, you click on education, and then you go on to blog from here. So go to education, go to blog, and then this is where you find everything. So you see, like I have put out a special report on oil. We talked about that, and then yesterday again we covered oil as well, and then coronavirus updates and so on and so forth. Dramatic turn for the UK. So everything is pretty much here. And then as of yesterday, how the European market, the day before yesterday, how the European markets were trading and what to look out for. So it's just quite important for you guys to look at these things, and then just making sure that you understand where things are, and then where to get them. Because if you know where to get them, then you can certainly go and acquire all of that help. So let's go back to our presentation. So so today is very, very important, folks. Why? The reason is very simple. Let me show you the reason for that. Let's go into the over here, the Forex factory, right? I love that. You can always get that data from our website as well, from AvaTrade, and you can go to Forex factory if you like it as well. So later on today, we are going to get the FOMC meeting minutes. Now, folks, the importance of this particular data is that this is where, when you are going to get all the important factors, which is going to really impact the dollar price, of course, right? So right now we know, with respect to the Fed, that the Fed is on a very loose monetary policy, right? Why? Because they have been cutting the interest rate, and moreover, they are pumping enormous amount of money into the system. So we have two different things. Firstly, the Fed is cutting their interest rate, and then secondly, the Fed is pumping money into the system. But now, in the minutes which are going to be, which will be released later on today, actually, it is expected that the Fed is going to keep its monetary policy stance the same. So meaning that the monetary policy is going to be very, very loose, and the Fed is not likely to change their monetary policy anytime soon. So as long as that remain in place, I think we are still okay with that respect, with anything which trades dollar against any other pair. Because right now, if we look at the dollar index was very, very strong. Then it has eased off from its recent highs. And I'm speaking of the Bloomberg dollar index really over here. But if we compare the prices against euro and sterling, which we will do that in a moment or so, you will see that how the dollar has performed against these currencies. And the reason for that particular performance is going to be coming from the FOMC stance, from the Federal Reserve stance. If the Federal Reserve keeps the monetary policy nice and loose, right, so that means that there are higher chances for currencies like euro, sterling, dollar, yen, Swiss, all of them to move higher. But of course, at the same time, it is also important to keep an eye on their monetary policy as well, because if their monetary policy starts to shift altogether, or all of a sudden, then we are looking for a very different, we are looking at a very different picture altogether. Now, the next one is that what instruments to trade. Now, with respect to instruments, when it comes to the FOMC minutes, you can literally trade anything, because this is a dollar denominated event, right? And whenever there is a dollar denominated event, it really has a much wider implications than anything else, right? Because once the dollar moves, we also know that the equity market is going to be moving as well. And at the same time, with the movement in the dollar index, we also have movement in gold price, and of course in commodities such as oil as well. Does that make sense so far? I'm really breaking it down to a very low and a simple level for you guys to understand. Okay, wonderful. Anyone here who doesn't really understand so far? Any confusions so far? No. Okay. So let's begin. Let's continue with our agenda. So now we're going to measure the current state of the market. We'll be looking at defining the levels which are really important with respect to that. And of course, then from through that, we will look at that what strategy can work with respect to the support and resistance zone, and what to really make out of them as well. So in order to do that, what we got to do is we got to bring out our MT for our one of our platforms, and then so you can see what exactly to look for. So where do you want me to start first? So I want you guys to take the lead now and then explain me that which instrument. Shall we start with the equities, meaning shall we start with the S&P 500 and with the Dow Jones, or shall we start with the commodities? S&P. Okay. I see a lot of people are very interested to see the S&P. Okay, so I have done a very, very, very extensive videos on S&P, and then my view about the S&P 500 index as well. So let's go. Let's begin with that. Let me just remove some of these indicators. I'm gonna remove one of them. I'm gonna remove this one, oscillator, right? There we go. So folks, as always, the first thing that you gotta do whenever, now please pay very careful attention, because I am gonna walk you through from a bigger time frame perspective, and then we are going to drill into smaller time frame, and then the same analysis is going to be applied for various other different instruments. So if you miss this one, then it is highly likely that you will not understand in the following charts as well. So it is very important. So as always, what I do whenever market falls, like the way that we have seen this massive sell-off, first of all, this sort of a sell-off we haven't seen in a very, very, very long time. We have to go back to 1970s to 1980s in order to see something similar. So this intensive sell-off, but whenever we see intensive sell-off, the first thing that we got to do is we got to go into our weekly time frame. The moment that we go into our weekly time frame, we got to bring out three different moving averages, right? First of all, the moving average that we got to put on the weekly time frame is your 50-week moving average, right? And then your 100-week moving average, and then thirdly, your 200-week moving average. And after doing that, what we got to do is we got to look at the price with respect to these moving averages and really determine where the price is trading with respect to these moving averages. If the price is trading above or below these important moving averages, we know that bulls do not stand a chance right now for the rally to continue. And similarly, if the price remains below these moving averages, like how it was over here, we know that the only party which is really in control of the price is your bears, right? Because they are dominating the trend. But right now, by looking at the chart, what we see is, so just ignore all other lines on my chart, just compare, just look at price and its moving averages. So what we gotta see is I was waiting for the price to come back to its 30-day moving, its 200-week moving average. And I really wanted to see how the price is going to perform when it's going to come to its 200-week moving average. So when the price came first right over here at this point, let me just make a little bit more bigger. When the price came right over here, it touched the 200-week moving average, then it retraced, and in the following week, we had another test of the 200-week moving average, and then the price retraced again. And this particular week, we came and we broke above the 200-week moving average without any doubt. Now, as of yesterday, the price closed above the 200-week moving average, so which was very, very positive. Another important thing is you got to measure the Fibonacci retracement from the high to the low, and then see where the price, how much the retracement has happened. If the price has gone above the 23% retracement level, this is a positive sign, meaning the bull momentum is strong and it is likely to continue. And if the price breaks above the 38% retracement, this is another positive sign. In fact, this is very, very positive sign because this shows that the momentum is very strong and the move is not a dead cat bounce. But the exact confirmation of that comes when the price crosses above the 50% retracement, because at that time we already know that we are way beyond the time period when we can call it a dead cat bounce, because the dead cat bounce, so first of all, you can call it dead cat bounce if the price fails to break the 23%. If it doesn't, then okay, the dead cat bounce concept kind of slows down or eases off. And then the second time, when if the price retraces from 38% retracement, then you can say that yes, okay, it is a still dead cat bounce. But when the price crosses above the 58, we are gone way beyond that at that particular time, because then what you are really doing on this particular chart, on this particular time frame, is that you will be talking with a 100-week moving average. And the moment the price crosses above the 100-week moving average, guys, the game is over and the trend continues to the upside, as long as the price stays above these moving averages. Because if the price stays below that, then forget about it. And another contrary indicator, which is quite important, and I want you guys to pay attention to this as well, is the bull and bear strength. So you can easily pull that in MT4 platform by just going into insert and then indicators, and then just bring out your out of your trends. You can bring this indicator out. So oops, what happened here? And the contrary indicator works when we have the maximum reading, like the worst reading on the bear indicator. Forget the bull, right? On the bear indicator, it is then that you are likely and highly likely to see a return or a change in the direction of that particular price movement. And then this is what we have seen in this S&P 500 case. Now, does that make sense so far? Yes, the recording will be saved, folks. So the time frame is your weekly time frame. The chart is the S&P 500 index for some of you who are asking. And the time moving averages that I am using, they are your 50, 100 and 200 week moving averages. Very simple to draw them on this particular on MT4. All what you have to do is you go into over here. Okay, they are simple moving average, folks. Go into here, go to trend, and then you go into moving averages right over here. So you change this to simple, and then you change it to close. They are all by default at this level as well. Then keep changing the period 50, 100, and 200. Very, very simple. And then put them on a weekly time frame. We are already on the 5th weekly time frame. Yeah, so the S&P right now is, forget about on the bear. So what I am trying to say is that when this particular reading of the bull and bear, when the bear one shows you the extreme reading, something like 806, minus 806, it is that point that you really got to get into the game, and then you should be really looking at for a trend to change its direction. And that is a great opportunity, perhaps, for you to get involved into it. Now, this is all what we got to see from our weekly time frame. Then we switch. Now we're going to move forward, folks, and then we move on to our daily time frame. Okay, and then what we got to do is click on over here, which says D, and then now we go into our daily time frame. The same concept applies. Forget about all these lines. Just look at the price action and the price action alone only. Forget about any indicators. Now what we are looking at, the concept over here changes slightly. Now what we got to look at is the 50-day moving average. When we move on to the daily time frame, we got to look at the 50-day moving average. And then what we wanted to see for the price is that the price needs to go above the 50-day moving average. Because if the price cannot move above the 50-day moving average on the daily time frame, it is highly, highly likely that the price isn't going to remain above the 200-week moving average as well on the weekly time frame, right? So the second confirmation for those traders who really wanted to wait and really wanted to see for the market to improve better, then what you got to do is you got to wait for the price to come near the 50-day moving average on a daily time frame, and then wait for the price to break above that. Now, of course, the FOMC minutes, when they will be released, they're going to bring enormous amount of volatility. In very soon, the U.S. markets would be open as well, and then you will see at the open of the U.S. market, enormous amount of volatility is expected once again. Right now, the futures are trading pointing to the upside. So it is highly likely for the price to move higher. But remember, as the price moves up, the moving average is also going to start to slightly slope higher, but not at the same pace as the price. Because at the end of the day, the moving averages are the average of the price. If the price continues to move lower, the moving average is going to continue to move to the downside. But it is the pace between the price, the lag between the price and the moving average, which really matters. But for now, this very simple concept is that you wait for the price to come near the 50-day moving average, and if it crosses above that, then there is a really great opportunity for you to get back into the market if you haven't been able to get into the market at this point, or if you haven't been able to get to the market at this point or even this point. So if you missed all these three entries, the next entry is coming right now, and it is coming very soon on your doorstep. Does that make sense? Okay, great. Okay, wonderful, wonderful. All right. So now what we're going to do is, because of the time constraints and everything else, what we're going to do is we're going to shift to Dow Jones quickly and then look at the chart from the weekly chart as well. So similar situation over here. Again, ignore everything with respect to, I'm going to delete the Bollinger Band. We really don't need the Bollinger Band over here for standard deviation. I'm going to delete that. I'm going to delete the average true range as well. We don't really need them. And let me just delete that one as well. Bollinger Band, we don't really need it as well, right? Here we go. So we're just looking at the price at a very naked, very naked, right? Very naked price action. That's what we are looking at. And we're looking at the weekly time frame. Once again, what we're looking at over here is the 200-week moving average. We're looking for the price. Now remember, the S&P 500 crossed above the 200-week moving average. So clearly the S&P 500 index is a stronger index as compared to the Dow Jones index. Why? Because of number of reasons. The reasons are that, you know, the S&P wasn't really sold off as badly as the Dow Jones index. The Dow Jones index has a lot of volatility. It is only exposed to 30 stocks when the S&P 500 index is exposed to 500 stocks. So obviously the volatility isn't that high for the S&P 500 index. But if you compare the three major indices amongst S&P 500 and the Dow and the Nasdaq, you can clearly see that it is the Dow Jones index which is the weakest index among the other indices, because Nasdaq is certainly the strongest index, and then we have the S&P 500, and then then we have the S&P 500, and in the last we have your Dow Jones index, right? So now you can see that the S&P 500 is coming very close to its 200-week moving average. If it wins the battle, then it is great. But if it doesn't win the battle, then we know that the path of least resistance is going to be skewed to the downside. Similarly, we're going to see the same scenario over here as well with respect to the 50-day moving average. When the price comes close to this particular moving average, we are going to see it is highly likely for the price to move above this one, but we're still not sure. We've got to see that coming, and then once we have it, then we can certainly say that yes, that you know the bottom is in place, right? The 23rd of March, this particular bottom was in place. What a beautiful price level was that at that particular time when the price formed it, and then ever since the price has been trading to the upside. Now let's look at your crude and see how the prices are performing. Now, folks, we have done several different videos on our YouTube channel talking about price coming to this weekly chart on the weekly chart coming at these particular levels that we have not seen since 2001. Has anyone of you have actually seen any of these videos? Have you seen our predictions that what we talked about previously? Okay, if you haven't, then I will strongly recommend you guys to go onto our YouTube channel. So please do go look at it. Okay, so fairly new to our, okay, just make sure that you are up to date with our content, with the daily content. So we talked about, you know, that this particular area is a very, very important area of support, and the price is highly likely to bounce from here. Now, obviously, this area comes from 2001, was something which we haven't seen in a long time. So the price fell straight into it. And for me, guys, what I am looking at when I look at the weekly chart for crude is I think that the bottom is in place pretty much for the time being. Remember, tomorrow is the meeting for the OPEC plus, and then a supply cut is very much expected, right? But now we can also look at this from the perspective of same Fibonacci retracement. So why don't we draw the Fibonacci retracement on this particular chart and then see how that is going to impact. So again, I'm going to click on Fibonacci right over here, and I'm going to bring it. I'm going to touch the top of this candle, bring it right to the bottom of this particular move. Now, there you go. Now, looking from the fundamental perspective, we can say that the supply cut is due tomorrow. So let me just discuss some of the fundamentals first of all. The supply cut is due tomorrow. How that message can be amplified or can be even more louder. The message can be a lot more louder if we see the US also joining the OPEC committee in cutting the production. So even if the US joins the OPEC plus tomorrow in cutting the production cut, and we get the 10 million barrel number, we're gonna see a very huge move for the crude price, which can easily push the price from 30 to 35 or even above. Why? The reason is because that will be seen as a cohesive move. That will be seen as a joint action. Now, if only OPEC Plus comes out tomorrow and then says that, okay, look, we've done the 10 million barrel price cut, the production cut, the price may move, from its current levels of 24 to all the way to 30, but 35 is the max where the price is going to stay. But after the production cut, as long as the healthcare situation remains under control, meaning that the lockdown starts to ease off, then obviously the prospects of crude are going to become a lot more better. Now, when we are looking at the weekly chart, obviously we are below that 23%, right? And we haven't reached that level. And then we are looking to buy, catch the falling knife, really. That is a sort of a scenario we are looking at. We are looking to buy it at a very close to its bottom. I think if the two factors, as I said, the lockdown starts to ease off, and secondly, so we're starting to see some sort of economic activity coming back to the market, then we can clearly say that the bottom is in place and the price is not going to touch the support level which is mentioned on the particular chart, which runs all the way from let me just see, it runs from $16 to $20, right? So that is a huge support zone on the weekly chart for crude oil, but that is where it is. But if the two factors continue to support us, then it is highly likely for the price, if we get the 10 million production cut tomorrow, that the price is going to continue to consolidate between, maybe the bottom will be somewhere where we are forming it today, perhaps $24, and then the upside would be as $35 the max. But if the lockdown starts to ease off quickly, economy starts to recover, then we start moving more higher. But if the US joins, then the situation is going to be different. Then we're going to have a much bigger impact, because then we will be talking about further rate cuts down the line. But right now, looking at the price action, I think there is an opportunity, despite the fact that the price is below all the important moving averages, meaning your 50-day moving average, your 200-day moving average, and your 100-day moving average. Now, obviously, this is your 50-day moving average, and this is your 50 week moving average. This is your 100-week moving average in orange, right? And then in this one is your 200 moving average. We can always change the colors of this just to keep things consistent. So all what you got to do is you click on it, and this is our 50, make it a bit more thicker so we know it. And then again, click on that, click add it. This is our 100-week. Again, click thick, and then click on the last one on here. Again, change the color to dark green, because I like to keep the dark green, because that gives me the signal that, okay, when I look at the price, hey, this is a very, very important moving average and we should be really paying attention to. Now, similarly, when we change the price on a daily time frame, again, I want the price to come above this 50-day moving average, and if it moves above that, that's great. But given the fact that right now the price has, there has been an enormous sell-off, but the price is sort of retracing from its 23% level, this is not really a good sign, and it shows further weakness. It means that perhaps some sort of a disappointment is expected from the OPEC plus tomorrow. I mean, that is what is priced into the market. Now, obviously, we don't know how what the decision is going to be tomorrow. If the decision comes up between 15 million barrel cut, then obviously the move is going to be humongous, and then the price is going to cross that 23 and then plus a 32%. But at the time, of course, you can trade at the time as well, but the opportunity would be pretty late for you guys, because the opportunity is right now to get involved into it. Now, does that make sense? Any questions so far? One more chart, which is your gold chart, and then we will finish off with gold. Now, when it comes to gold, what we're going to do is we're going to look at our daily chart. Shall we change the backgrounds? Because I did this purposely so for you guys to show you how to change the backgrounds and stuff. So you right click, you go into the background. All what you got to do is change the background color to white, foreground color to this to black. Bar up will bar down red, bar up green. Similarly, bull candle green, bear candle red, and then with that we can click red. Okay, sorry. Now we can clearly see that the chart colors have changed, right? So let's go to our weekly time frame, and then now let's start adding to our different indicators. First of all, what we're gonna do is we can delete all of them, delete all selected, and again we're gonna delete this one, delete all arrows, delete this one, and I'm going to delete this one as well. Going to delete. Okay, just wanted to make sure that we are not deleting something that we shouldn't be deleting. So what we're gonna do is we're going to look at this particular line, and we're gonna click delete here as well, right? Okay. For the resistance, I'm going to move it over here. Now let's start adding our moving averages to that. So trend, again, we go to our trends, and then we go to our moving averages, which is just over here, 200, bang, again, insert, indicator, trend, moving average, change it to 100, and then change it to orange because we know this is pretty good. And then again, insert, indicator, trend, then again moving average, changes to 50, and change the color to pink so that we know that what the color is going to be, right? So obviously on a daily chart, why don't we begin with the weekly chart? On the weekly chart, you can see that the how price came near the 50-day moving, 50-week moving average, and it bounced from here. Beautiful, perfect. That is what we wanted to see. Now the price is above all the three important weekly moving averages. We know that the trend is to the upside. This was a very strong opportunity for you to buy when the price came close to its 50-week moving average. If you would have bought it, then great. But if you're not, now let's look at the opportunity now. So with respect to the weekly time frame, what we've got to look at is we've got to define our resistance zone. So in order to do that, I'm going to pick up the resistance zone, which is sitting right on top of this particular candle, and the other one sits right on top of this particular, just over here. Again, we can double click on them and then make the lines red, because the resistance lines should be red in my opinion, because it makes it easier for us to understand when we look at the chart where those resistance levels are. Again, double click, right click, and then we go into over here and change the color to red. Let's do it together, and then there we go, right? So, okay, and then similarly, I'm going to draw my support zone. The support zone is going to be just below that 50-day moving average, and I'm going to encompass that just over here. So really taking the good chunk of this consolidation. But as always, let's change the color to support, because support means buy and buy means green, just like how we stand on the traffic light and then it means it go. So that's the idea that I take. You know, when you stand on the traffic light and you see that green light, then the green light tells you that okay, go, and the red light it tells you that no, stop. So that's the concept that pretty much I take with them. Now we can move these over here, and then now similarly we can move this one over here, right? Now let's switch them to our day on our daily chart. So right now, the price, as you can see, is trading way beyond our important zones, because we are talking about 1749 to 1797. Right now, the price is trading at 1650. The next resistance for the gold price is really on top of this particular candle, which remains, just under 1700, right? Just right over here. So the price really needs to break above this level, and I certainly believe that there is no doubt in my mind that the price is likely to break above that 1700 mark, and then that is the future for the price to move forward from here. I think any retracement in the price for gold, especially when it comes to gold, it remains an opportunity for the price to move higher, especially when the price comes to 50 or 100-day moving average. Keep an eye on a daily time frame, and that could be your opportunity, that could be your trigger to buy. In a short term, your buy levels are just defined by over here. So let's take that 100-day moving average and just right over here. So these are your short-term, buy levels. So if the price comes into these ones, you can certainly trade them. You can certainly have a look at them. You can certainly look at from a perspective of an important support zone, right? But obviously, you always have to make sure that your risk parameters are in control, and whatever you are doing is according to your trade plan, because nothing is more important than following up your trade plan. If you do not follow your trade plan, then stop trading for a while, maintain your discipline. Once you have maintained your discipline, then get back on it, get back with the demo account. Don't start with your trading account straight away. Wait, and then once you have established your discipline in your demo account, then go back to your actual trading account. Does that make sense? All right, folks, this is the time for you guys to really ask any questions if you may have, because we are coming towards the end of our webinar, and I wanted to give you an opportunity to ask us any questions that you may have right now. And, if not, then of course we will see you next week, because every single Wednesday, I hold webinar, and this is a masterclass on a special different instrument or about a special different event, and we discuss various different instruments. Not special instrument, but that one special instrument is always going to likely to have more influence than anything else. But overall, we look at every single market, and then we define the levels and with respect to that particular event and how that is really going to impact it. All right, folks, thank you so much for joining the webinar. I greatly appreciate that. And I greatly appreciate all the patience. Stay safe, stay clean, stay inside, and keep learning, and keep the momentum up. All right, folks, thank you so much again for your time, and I will see you guys next week.